There's a lot going on, as Carl was saying. The curve's a little steeper today. The 10-year continues to stay around 410, and there it is, right on the button. Bitcoin having a day, bouncing 6%. Tech is leading, Nvidia's up, Oracle's up, Palantir is as well. Josh, the final month of this year underway. How do you see things today?
So I was talking to somebody last week about what's like the most obvious thing that you think is going to happen that people still aren't expecting, even though it's obvious, like kind of joking around. And the truth is, they're going to buy these Mag 7 stocks. And I know how badly people want there to be a new narrative. I know how sick and tired people are of seeing the same 10 stocks at the top of the leaderboard quarter after quarter, year after year. And I understand how people went overweight, healthcare and energy and staples and some of the other areas that started to rally in late November as the AI story started to get a little bit shakier. But like in the end, these are the biggest, most liquid stocks, and contra the bubble narrative, they're not even expensive. Meta is at 22 times forward PE. Like, what are we talking about? You're going to tell me Costco at 45 is cheaper? Nvidia is the second cheapest stock in the Mag 7. It's got a forward PE now at 24. And I understand all the stories about competition, et cetera, not dismissing that. But again, this is the best company on earth, and it's 24 times forward earnings, a multiple you have never been able to pay for a name with execution at this level. So I really feel, Judge, we had this huge momentum swing. On November 20th, only 4.6% of all the names in the XLK sector spider were above their 10-day moving average. Today, that's 86%. That's the highest since July. These names are being accumulated, and I feel like second verse, same as the first. Everyone gets how this year is going to end. I know people want a different narrative. I just don't think you're going to get it.
Joe, it sounds a little bit different than what you're looking for.
Well, I'll tell you this. I love that Josh is targeting the conversation towards the Mag 7, because I think that's the right place for the conversation to be. And I think when we turn the calendar into 26, I told you yesterday, I think 26, it's about quality, not momentum. Well, the Mag 7 is the essence of quality, Scott. And I think it's going to look very similar to what it did in 23 and 24. You know, Josh is talking about consensus as you move into the end of the year. The consensus I keep hearing about is about this concentration and about the concentration being a risk and how you want to broaden out. I think that concentration remains in place in 26. Look at what is going on with the Mag 7. Look at Apple. Apple is up 40% since August 5th. Loop Capital today raises the price target from $3.15 to $3.25. I read the note. They did not mention once the ability to deliver on Apple Intelligence, which we know this company is behind on. So you tell me, is it priced into the stock or not that they're going to succeed with Apple Intelligence? Because I'm not so sure that it is. But I'll tell you what, a lot of people want to own Apple right here. I made it my final trade yesterday. I know Josh made his final trade last week, and it continues to move higher.
Why are you skipping past the month of December? You're talking about 2026. I think people want to know if we're going to have a pretty... Right? I mean, Josh was talking about the rest of this year. You bypass that. You just start talking about 2026. Look, you have to get your notebook back of all the things I say about you that you keep score of.
Let me write this down.
You'd have to write this down now because you bring it out. Like, what about... That's not what he's talking about.
Here is the notebook.
He is not talking about that.
He is talking about the Mag 7, and the Mag 7 are going to import moving into 26.
You're talking about 2026. What's going to happen in December?
So let me respond to you by saying this. Beginning Labor Day, I said we would have a chase for performance into the end of the year. And I think we'd agree to a certain extent that we've had it. But now we're basically less than 30 days away from the calendar turning, and you're not going to like my answer. I have no idea what's going to happen here in the final 3 weeks of the year, where liquidity is coming out of the market, where volumes are getting lower and lower, where we have all these different dynamics like an inflation reading on Friday, a Fed meeting, maybe a hawkish cut. You've got yields rising. So I'm sorry. I don't know where we're going over the next 3 weeks. Are we going to complete to chase for performance? Maybe we are. I have no idea. If we do, I'll be happy about it. But I am more focused on how do I want to think about investing in 26.
He punted as bad as the Giants kicker last night.
That was awful.
Oh, you think it was
Joe
a punt?
just put his foot in the ground.
That was awful.
When he was approaching
I
the
don't
ball.
know. I don't know where we're going in the next 3 weeks.
Maybe it was a punt, not a field goal. But nonetheless,
Johnny, you know where we're going in the next 3 weeks?
Well, look, here I'm on the other side of where you are. I think I just heard you say, and I need to confirm this, that liquidity is getting tighter. Because the opposite is what I see, both with quantitative tightening coming to an end and the shutdown.
I'm not talking about monetary liquidity. I'm talking about the liquidity in the market itself.
They're the same. They're the same.
You see what's going on in crypto? You see what's going on with SoftBank?
Okay, so crypto is the aberration to what I'm saying. Liquidity, let me just start with this. Liquidity
has an effect on the market.
Liquidity has come back to the market. All right. We had the shutdown end. Treasury is putting money into people's bank accounts again. We had quantitative tightening end yesterday. Liquidity is picking up. Your point about crypto is well made. Yesterday was an aberration. And you see crypto is up today. That's what it should be doing in response to both increasing liquidity and an increasing risk on sentiment, which I agree with Josh with an asterisk. I agree with Josh that Mag 7 are absolutely going to perform going into year end. But what I'm also seeing, this is the asterisk, is a lot of things that have nothing to do with AI are performing well right now. I mean, just picking names out of a hat, like Delta Airlines, Wynn Resorts, things that we talked about yesterday. But still, these have nothing to do with AI.
You were going to go there.
It's just what I'm seeing, Scott. I mean, it's not. Mag 7 should do absolutely fine into year end, but so should the markets overall.
You go. Hold on, Josh.
Can I please get a one-year chart of RSP?
You can. Yeah, you definitely can, but you're going to wait.
Yeah, but 1 year has nothing to do.
I want to hear from
what we're saying.
I want to hear from Shannon, who hasn't had a chance to speak yet. So just bear with me for a minute. Shannon.
I actually want to pick up on one of the points that Jim has been making, in that the areas that are actually starting to perform a little bit better are around the consumer. I think there has been this overhang in terms of the impact of the shutdown, the impact of continued price increases, the compounding, the pressure that the consumer has been under. And what I've been talking about over the last month or so has been perhaps that pressure being eased in terms of retailers, in terms of travel. We're seeing, Scott, if you want to look for other pockets of strength outside of AI, we're seeing this expectation of stronger growth next year. We're seeing the potential for perhaps a better holiday spending season. And I think that that's pervading other parts of the market where investors, to both Joe and Josh's point, the easy button, the proverbial easy button for AI is the mega caps, right? It's the Mag 7, and people are going to continue to buy that. However, I think what is important is that this broadening out is starting to pick up some steam in terms of there are areas where people have been very hesitant or reticent to buy.
It did in November. That's why everything but tech was working well. Healthcare, one of the areas people were afraid to buy anything because it didn't work for a few years. There are many other sectors that, yes, the broadening out worked in November.
But that doesn't refute the fact that we could still get this chase for performance to the year end. And if these AI stocks are available, why wouldn't you want to continue to buy them? Because they're willing to continue to spend. They're willing to continue to compete. And they are helping to.
I'm not arguing with that.
They are growing that footprint. And so this AI enabler trade is going to continue into 2026. What I would caution the viewers is that at some point it's going to be necessary to shift your focus to strong balance sheet, cash flow generative adopters of AI, and that's where the next phase of this trade is. So through the end of the year, because I know you're going to press me on this, I think that S&P 500 is going to perform strongly. I think that tech is going to lead the way, but I think going into 2026, if you aren't trying to figure out where the next leg of this trade is, I think you're going to be behind.